Good morning, good morning, good morning. Welcome to today's Morning Blast with myself and Mr. Michael Brown. It is Monday, the 28th of April, all day. Before we get started, before Michael gives, well, Michael and myself give a morning preview and laying on what's happened overnight, what's happened over the weekend, what to look forward to this week, I better get the legals out the way. So, as usual, nothing discussed on this space session constitute trader or investment advice or infers any kind of endorsement by PIQ or indeed Mr. Michael Brown and myself. 1 second, let's try and get Michael Brown added. Michael, you might have to jump off and jump back on. I don't know what's going on with the invitations. 1 sec. Let's get him added. Invite to co-host, send co-host invite. It's in the ether. So that means it's on its way to you. Yes. Good morning, my dear friend.
Very good morning, Ryan. Good morning, everyone. That was all rather odd. I was allowed to speak, and then my permissions were aggressively stripped from me with no notice.
Well, yeah, no comment, no comment. Wasn't me. Wasn't me.
I was worried I'd spent too much on your credit card at lunch
Well,
on
you
Friday
did,
for a moment.
but that's beside the point. And I also, if our CFO is listening, I didn't even put it through the company. That it was a personal bet, so I paid for it out of my personal pocket.
Oh, how jolly decent of you.
And that's my story, and I'm sticking to it.
Oh dear. Right, have you done all your legal shenanigans? I missed all
Yeah,
of
I
that.
think so. Let's take a gamble.
Oh, I'd really rather not, but we're going to have to. Good morning, everybody. In terms of last week, then, and where markets finished up on Friday, it was actually a solid day in terms of risk appetite. The S&P 500 adding about 0.75%, the Nasdaq gaining just over 1%. That marks a fourth straight daily gain for both, and also resulted in the S&P 500 closing up for the week by about 4.5%, which is not too bad all told. We have seen futures take a little bit of a move lower this morning, although we have seen that paired in the last sort of 20 minutes or so. The S&P future basically back to unchanged as I speak and as trade gets underway for the new trading week. In terms of market moves elsewhere, as the week drew to a close, we saw gains across the Treasury curve, with 10 and 30-year yields falling by about 8 basis points apiece. It was a relatively choppy session in the foreign exchange space. The dollar marginally firmer, with the dollar index gaining about a third of 1%, although again running into resistance around the 100 figure and remaining capped below that level this morning. Although, to be completely honest with you, looking at the G10FX board, it doesn't look like the market's actually woken up for the start of the new trading week just yet. Gold losing its shine a little bit on Friday, with the yellow metal down by around about 1% to $3,320 an ounce, and we trade another 1% softer this morning. One thing to bear in mind with gold that I think is interesting over. Oh, Jesus. Mr. Kemp has joined the call. Not Ross, for anyone wondering. One thing to just bear in mind with gold that I think is interesting is throughout much of the recent move higher, we've seen the yellow metal really underpinned throughout the Asia session. Buyers stepping in during Asia trade, just buying the dip relentlessly. Friday and today, that hasn't happened. So for the gold bugs out there, that may be a little bit of a warning sign, particularly when you consider that long gold is probably one of, if not the most crowded trades out there. There could be room for that to unwind to the downside. In terms of fundamental drivers on Friday and over the weekend, I guess the most interesting was an incredibly wide-ranging interview that President Trump gave with Time magazine to mark 100 days in office, which I believe is up on Wednesday. I think the 30th is Trump's 100th day and as president in his second term. As I said, this interview very, very wide-ranging indeed. So to break it down by subject, I think is probably the easiest way. When speaking about trade, President Trump once again said that Chinese President Xi has called him and that the US is in active talks to strike a deal with China. Do bear in mind here that this interview was conducted on the 22nd of April, so the comments are perhaps a little bit stale, and of course we have heard numerous denials from the Chinese side that these talks are actually not taking place, and we've again heard from the Foreign Ministry who have denied any contact between the two sides in their daily press briefing this morning. On the whole, to be completely honest with you, the comments that Trump was making in this interview were relatively what I would call market unfriendly. And I think the two lines that were the most unfriendly to markets was the first when Trump was asked if tariffs on imports are 20, 30, or even as high as 50% in 12 months' time. What would your view on that be? And Trump said, well, that would, and I quote, be a total victory, which is clearly not something that market participants are looking for. The hope among investors is that this 90 deals in 90 days sees the tariffs reduced quite considerably from where they were on quote unquote Liberation Day. And clearly that is perhaps not what Trump is thinking. The other line that I think posed a little bit of a headwind, although clearly markets shrugged that off relatively easily, is that Trump was talking about whether he would raise taxes on the wealthy. And he said that he loves the concept of raising taxes on millionaires and that he, quote, certainly doesn't mind having a tax increase. Again, if you're thinking as sort of as contra a market friendly and GOP policy position as you can get, well, that's probably it right there. Just a few other notable comments from this article or this interview that Trump gave. He did a bit of an impression of Pinocchio, saying that he wasn't worried during the Treasury market stress back earlier in the month. Well, if he wasn't worried, clearly someone was, because it prompted him into a massive U-turn. He also said that he supports a ban on congressional stock trading. Of course, this is a little bit of a hot topic in the United States. I'd be keen to know whether he supports a ban on Treasury Secretary Scott Bessent giving private briefings to a whole load of investors, but sadly he wasn't asked about that. And
I
he
just
also made a
want,
whole
sorry, just on this post, it's okay. It's okay saying, yeah, I'm against, people, um, politicians trading, but does it really matter when your best mates are also trading? When he's like in the white hat in the Oval Office saying, "Oh,
well,
points that his billionaire mate says, oh yeah, he made 500 million today." So
exactly.
so I don't think, to be fair, I don't think that politicians trading really affects him, as long as they
No.
don't stop him doing it. As long as they don't stop him telling his mates what he's about to do.
Yes, that is very true. There are also a whole host of comments on geopolitics in this interview that Trump gave. Again, context, this was given on the 22nd of April. He was saying that he thinks peace between Russia and Ukraine is possible, but that Crimea will be staying with Russia. He was asked, would the US stay out of the Middle East in the event of a war between Israel and Iran? And Trump says, no, I didn't say that. He also said that he's being completely serious when talking about acquiring the Panama Canal, Greenland, and making Canada the 51st state. Of course, on that last remark, do bear in mind that it is election day in Canada today, and former BOE governor, aka the unreliable boyfriend, Mark Carney, is likely to romp home in that election, pretty much because of those threats Trump is making towards the sovereignty of Canada. In terms of other bits and bobs towards the back end of last week. Sticking with trade, and this news actually broke towards the back end of the cash session on Friday. The Wall Street Journal noting that the Trump administration have laid out what they were calling a tariff roadmap in order to streamline trade talks. Essentially, this is US officials coming up with a kind of template that sets various terms for all of the talks that are taking place, basically to get through things as quickly as they possibly can. This framework basically lays out various categories that are up for negotiation. So, including things like tariffs, obviously non-tariff barriers, regulations on goods from the United States, various other commercial issues, digital trade, potentially currencies as well. And then within those categories, US officials would spell out their demands for individual nations, depending on how they view all of the nation in question dealing with the category in question. The other thing that these Wall Street Journal reports were talking about was, I mean, it makes trade negotiations sound like a reality TV show, to be honest with you. Apparently, the administration are looking to invite 6 countries in. So they want to get 18. That's kind of the focus, 18 big deals. They want to get 6 countries in 1 week, 6 countries in the next week, 6 countries in the third week, and then the first block of 6 will come back in the 4th week. So almost like this sort of non-stop negotiating roundabout. I mean, quite frankly, it's farcical, but if they manage to pull that off, then fair play to them. Although, as we said previously, it does seem to be that this is not going to be a case of an actual formal trade deal is done. It's going to be more in line with the reporting that we had regarding India last week, where it's a sort of memorandum of understanding that is signed, as opposed to, or at least in these first 90 days, as opposed to an actual ratified trade agreement. In terms of other bits and bobs from Friday, we did have some economic data from the other side of the Atlantic. Retail sales in Canada fell by 0.4% on the month in February, bang in line with market expectations. And consumer sentiment in the United States, per the University of Michigan, that came in at 52.2, according to the final reading in April. That's up from the preliminary read of 50.8. And I think the reason for this, although of course do bear in mind the sample size is very, very small, I think the reason for this is because the final survey incorporates developments since Trump pulled his U-turn on reciprocal tariffs. So that is why we've seen a modest improvement in sentiment as the month has progressed. And lastly, just a couple of bits of corporate news. First, well, three things from me. One is that Shein have raised their prices by 300 to 400% on various goods going to the United States. So still dirt cheap, to be completely honest with you, but nonetheless a sign of how those cost increases as a result of tariffs are going to be passed on to consumers. Secondly, XAI, which is of course Elon Musk's company, and I believe because of recent structure changes, they're actually now the holding company behind Twitter, or X, which is of course the very app that we're using now. They are in talks to raise $20 billion in a funding round. And last but by no means least, in M&A, it looks like Deliveroo are cooking up a deal. They are in talks with...
Oh,
Sorry.
fuck's sake.
I
Yeah,
can't even get through the bloody thing.
mate.
they are they are in talks with DoorDash, who are apparently their equivalent in the United States, on a proposal to buy the firm for 180 pence per share. For reference, they closed on Friday at about 145p, so that would be a 25-ish% premium to that closing price. Deliveroo, in light of that news, have this morning announced that they are suspending their share buyback in order to focus on the ongoing negotiations. And of course, I guess the only question now is whether or not that deal will end up being delivered.
Oh, I thought you were going to make some like knocking joke. They came a knocking or something like that, but no. Oh, are you done?
Yes,
Are you proud
maybe
of yourself?
forever.
Are you proud of yourself? Yeah,
I am. Yeah,
yeah.
I spent a while preparing that one.
Yeah, I
So.
bet you did. That's the annoying thing. Well, thank you very much, Mr. Michael Brown. So I'll just crack on with some headlines via Zach, who is back in the country finally, until his next
How long
holiday.
for?
Oh, I think we're doing hours rather than weeks. I'll give you a clue.
Well,
Um,
he's a non-dom now, so he'll have to go again.
well,
So.
there is that. There is that. So anyway, so overnight news headlines. Obviously, these, as we know, can be found in our Substack, our pin tweet, etc., etc. They are the best way to catch up with all the news you might have missed overnight. But cracking on, so just some Trump headlines or some trade headlines, should I say? Trump said tariffs will eventually allow income tax cuts for Americans earning under $200,000, claiming the US is entering a quote new external revenue system. Okay. Treasury Secretary Bezant said no direct talks with China are underway, though early stage trade discussions with Japan, South Korea, and UK have been productive. A Wall Street Journal report says the US will streamline global trade talks with a quote common template approach to individual country negotiations. China official media warned of a long and arduous struggle. Sounds like a morning with Michael Brown. With the US and pledged no.
Oh, hang on a minute. That's a
Sorry.
bit harsh.
Sorry, I do take that back. That was a bit much. Sorry. And pledged no compromise. That sounds about right. Um, Foreign Minister Wang called US tariffs, uh, quote, extreme egotism, um,
What with
which,
Trump? Surely not.
well, I think that's perfect, to be honest. I like that. Japan denied US comments favoring a weak dollar and strong yen. Japan and Vietnam pledged to uphold free trade. Trump said American ships should transit the Panama and Suez Canal free of charge. As we just heard from Michael, Sheen sharply raised US prices ahead of imminent tariffs on small parcels. LNG, nat gas, and shipping industries warn new Trump rules are unworkable. EU gas buyers say methane rules are complicating contracts. South Korea said it will approach US trade talks, quote, calmly and cautiously this week. In macro headlines, Trump's approval rating is dipping, approaching his 100 days in office, while the White House prepares to tout early accomplishments. I also seen some headline about the next 100 days involving, quote, torpedoes. I hope he means kind of metaphorical and not literal ones, but, who knows at this point. Former Fed Governor Walsh, as we know, is really going for Powell's job, called for fundamental changes to Fed operations amid speculation may still replace Powell. Goldman Sachs says there's no major treasury selling yet, but by foreign investors, but portfolio adjustments are, quote, ongoing. Beijing pledged more export support and domestic stimulus to absorb tariff impacts, while Xi calling for AI, quote, self-reliance and self-strengthening. I'm not sure, I haven't scrolled down, but if we don't come to it, just in case I miss it, I did see reports over the weekend that Huawei are looking to come up with their own NVIDIA killing chips. So one to watch on that front as well, particularly focused on AI usage. China's Q1 industrial profits return to growth, but pressure remains from trade tensions. Hong Kong's housing market fell for a fourth straight month, while two IPOs showed resilience in equity markets. The BOJ is expected to pause tightening this week amid tariff uncertainty, while the ECB policymakers are growingly confident about a June rate cut. France, they will propose consolidating or eliminating one third of its government agencies to save money. I can promise you
Oh,
now
that's never going to
that
happen.
that's exactly what I was going to say. I can promise you now that won't happen, and if it did, there would be civil war.
Shall I tell you
That's it.
what they're more likely to do is end up adding an extra
Oh
third
yeah,
with
no,
all the bloody admin that
they,
those layoffs would
they're
cause.
going to stick in a new agency to oversee the other agencies to make sure they're cutting costs. That'll be,
Goodness.
yeah. If that did happen, genuinely not a shock in the world. UK economic confidence dropped to a record low, and Australia pledged new healthcare spending ahead of its May election. Saudi Arabia's FDI fell for a third consecutive year in 2024. Geopolitics: a chemical explosion killed over 40 people in Iran's Bandar Abbas port. This has been linked, this isn't what's said here, but from over the weekend, from doing some reading, this has been linked to storage of propellants for missiles and such like. The US and Iran will continue nuclear talks next week, or I guess that's this week, although Iran voiced extreme caution over success. Trump and Zelensky met privately at the Vatican. Trump officials are pressing for peace progress, though German defense minister warned against US proposals. Trump publicly rebuked Putin for missile strikes in civilian areas. Lavrov, who we know is always very aggressive in his language, confirmed Russia would continuing targeting Ukraine military sites and discussed bilateral ties with Secretary Rubio. Greenland and Denmark strengthened ties amid Trump's renewed Arctic interest. I think Trump's again played a quite poor hand very badly here, because there was a
Surely
moment,
not.
there was a moment when people in Greenland were like, actually, do you know what, we quite like Trump, but then he seems to have overplayed it a little bit, and now they're kind of running back to Denmark is the vibe I'm getting. China seized a disrupted reef near the Philippines' key outpost in the South China Sea. Iran, not even slightly near there. Ireland, the Irish
Oh,
defence and
bloody hell, Ryan.
I saw IR. Irish defence and security firms are pivoting to cash in on EU military spending. I didn't know Ireland had any defence firms, to be honest. Equities and corporate headlines now before I go back to you. Huawei, here he is preparing to test a powerful AI processor to replace NVIDIA's high-end chips. NVIDIA's fast track.
Apparently, they're a load of crap, according to our AI correspondent, Tom Talkscast.
Oh, well, I'll take his word for it. NVIDIA fast-tracked B300 chip production to May, scrapping modular redesigns to meet soaring demand. Taiwan passed a law ensuring TSMC's cutting-edge tech stays domestic, while China plans to consolidate 200 chip tool makers into 10. Musk's XAI is seeking a $20 billion raise, targeting a 120 billion valuation for its AI and social media combo. The Trump administration faces pressure over Medicare coverage for weight loss drugs. Airbus nears a deal to take over Spirit Aerosystems' Belfast site. Merck, this is the pharmacy, not the shipper, agreed to acquire SpringWorks Therapeutics for around 3.9 billion. Mediobanca launched a 6.3 billion euro bid for Generale's wealth management team. TikTok plans to launch online shopping in Japan within months. Toyota is exploring a 42 billion with a B buyout of Toyota Industries supply chain arm.
Is that
Nissan.
yen or some
That's
proper
dollars. That's
currency?
dollars. That's dollars. That's
Oh,
proper
blimey. Oh,
currency.
okay.
That's a real one. Nissan plans to shut its Wuhan plant by 2026 amid rising competition from Chinese automakers. And finally, from me, Saudi Aramco is investing heavily in synthetic fuels to extend the life of combustion engines. I think that actually ties in quite well with the kind of the walk back we're seeing in European car manufacturers, where they're kind of saying, "Look, we know the EU kind of were forcing us to do EVs only, but it's just not going to happen." So I think Saudi
Yeah.
Aramco coming up with potentially a very, very clean fuel to allow them to keep doing traditional engines, combustion engines. I think that's a nice little move by them. But anyway, back to you in the studio.
Indeed, yes. Right. In terms of today, then, a few bits and bobs worth noting on the economic calendar, although it is a little bit more of an empty docket today and then gets much busier as we move through the remainder of the week. In terms of data, we have manufacturing figures from the Dallas Fed due a little bit later on today. They are, of course, going to shape expectations for the ISM manufacturing survey, which we get later on in the week. In terms of other things to focus on, today we will get the financing estimate as part of the US Treasury's quarterly refunding announcement. For those who are unaware as to how this works, the financing estimate, which we get today, is basically the Treasury saying how much they will need to borrow and what issuance they will need to make over the next quarter. And then on Wednesday, we will get the actual issuance breakdown, which is essentially the Treasury going, okay, well, here's this big pot of cash that we need, and here's how we're going to break it up across the yield curve. We also have a couple of ECB speakers today. We're due to hear from Ollie Rehn and the Vice President Luis de Guindos. And of course, do bear in mind that the FOMC, they are now in their pre-meeting blackout period until the next Fed meeting and Powell's press conference, which is in the evening of the 7th of May, next Wednesday. In terms of other bits and bobs to bear in mind as we move through the remainder of the week, it is, to be completely honest with you, a bit of a monster in terms of what is coming up. On the data front, this week brings our first read on Q1 GDP out of the Eurozone and out of the United States. Both of these figures are due on Wednesday. The Eurozone economy expected to have grown by 0.2% on a quarter-on-quarter basis in the first 3 months of the year, while the US economy is expected to have grown by 0.4% in over that same period. Although do bear in mind that the US GDP number is an annualized print, so that is 0.4% annualized quarter on quarter. Other notable releases this week include the March core PCE figures out of the United States. Of course, it is the rule that I have to tell you that that is the Fed's preferred inflation metric, and that is expected at
Drink.
2.6% from a prior 2.8. Also, this week we have the latest manufacturing PMI, the ISM manufacturing PMI out of the States. We also have on Friday inflation figures from Europe, where headline CPI is expected at 2.1%, down from a prior 2.2, while core CPI, that's seen rising to 2.5% from a prior 2.4. This data referencing April. And also on Friday, we have the latest US labour market report with headline non-farm payrolls set to have risen by 130,000 in April, a slowdown from the 228,000 pace that we saw in March, while unemployment should hold steady at 4.2%, and average hourly earnings are expected to have grown by 0.3% on the month. Besides that, in terms of monetary policy this week, as I said, it is the Fed's pre-meeting blackout period, though we do have plenty of speakers due from other G10 central banks. And on Thursday morning, there is a policy decision due out of Japan, with the Bank of Japan expected to hold rates steady at 0.5%. Meanwhile, as mentioned earlier on, it is quite a busy week in terms of politics as well. Today is federal election day in Canada, where Prime Minister Mark Carney is set to see his Liberals returned as the largest party. The question is, are they able to win a majority? And opinion polling looks certainly points towards the likelihood of them doing so. Then right towards the back end of the week on Saturday, the 3rd of May, it is election day in Australia. Again, the incumbent PM Anthony Albanese set to see his Labour Party returned as the largest in the Aussie Parliament. The question is he able to win a majority? And having seen the state of the opposition leader, it would be an absolute miracle if he did not. Last but by no means least, it is an incredibly busy week of of corporate earnings as well this week. In fact, it's the busiest week of first quarter earnings season, with over 30% of the S&P 500 by market cap set to report over the next 5 days. Of course, most attention will fall on the magnificent 7 names which are due to report this week. Those are Microsoft and Meta, who report after the market close on Wednesday, followed by Amazon and Apple, who report after the market close on Thursday. There are a whole host of other earnings prints due throughout the next 5 days. Obviously, far too many for me to go through on this call, but there are a number of bellwether stocks that are also due to report, such as UPS, who report on Tuesday. Their view on tariffs and trade uncertainty is going to be very, very interesting indeed. We also hear from a number of consumer names as well. All of this, of course, not only telling us about how those companies are performing, but also helping to give us a bit of more anecdotal background evidence on how the economy and how companies within the economy are dealing with tariffs and all of the various bouts of political uncertainty that we continue to see. And of course, last but by no means least, not scheduled, of course, but market participants will continue to pay very, very close attention indeed to whatever President Trump has to say in all of his various media appearances and, frankly, inevitable Truth Social posts. Focus, of course, remaining not only on the trade situation, but also geopolitical developments, of course, after Trump met with Zelensky in Rome on Saturday morning. And for now, at least, that is all from me for this
Wonderful.
morning.
Thank you very much, Mr. Michael Brown. As usual, thank you very much to the listeners for tuning in. We really do appreciate you. Shout out to Cam for the Crypto Blasters coming along shortly. Well, I say shortly, about 1 o'clock. And Angie for the Grey Market Blast at 2:15 UK time. And also, just a reminder, it is going to be the first Friday of the month this week. It's non-farms this week. Therefore, it's non-farm pints. So me and Michael Brown will be going
Indeed.
to the Oyster Shed on Friday. So if anyone fancies a beer, watch me get ID'd and watch Michael Brown get pissed, which is what usually happens, then come along, join us. Just a caveat, you've got to buy your own fucking pints. We aren't paying for them. But yeah,
Yeah, that's a
yeah,
very
just I'm
important
going to
caveat,
make
actually.
that very clear. But no, it'd be great to see you. Like guys have been coming down. We know we've got a few extras coming down. It's like Ryan from Forex Analytics as well, because it's no longer Easter holiday. So
Oh,
so
yes,
yeah,
he
it should
is.
be a good turnout. So do come down. But on that note, we will see you later. Have a good one. If you are trading today, keep it tight, stay safe, and yeah, we'll see you tomorrow. Goodbye.
Indeed. Bye for now.